This is Satya Pradyuman of Cirrus Research. The latest issue of the briefing report is just out. The briefing report is a summary of market movements throughout the prior period. It also looks at key sectors, factors, portfolio performances. The title for this month is Markets Continue to Shrug Off, Tariff, Saber, Rattling. This chart here relates how both Canada and Mexico had been weakening from the election period into mid-December. But as you'll notice, both Mexico and Canada, we've seen a very much a reversal, even including going into the past week where there was a real sort of threat of a tariff war. What is different is the Chinese exposure. So firms exposed to China had actually moved through from election period quite well. In the last few weeks, however, we've seen some of those firms begin to pull back. Some of this has to do with the fact that technology, which happens to be some of the most sizable exposures selling to China, some of those firms have actually weakened recently. So to some extent, maybe it's tariff related, maybe it's not. But anyways, the broader picture, though, is a lot of these tariff baskets, as we've defined them, they continue to move without seeming to face some sort of wall, at least for the moment. So we'll be using these proxies to keep a track on how the market is interpreting tariffs as we track here. Another area that we're covering has to do with the technology weakness that we've seen this month as DeepSeek, an alternate AI platform launched from China, has really surprised the market. What you'll notice is that across the board, the hardware companies, the semiconductors, were quite a bit softer, while application software firms actually did quite well. This is important because it ties into this idea that the downstream beneficiaries of AI spending are starting to perform much better. So we believe in moving to AI applications, the software firms are going to play a much bigger role in this. So we expect to see some of this rotation from hardware and software. The sell-off in January for semis probably amplified this effect. And another point has to do with really with the release of the new AI platforms that are supposed to be so much more efficient, cheaper, lower energy. The sell-off in alternate energy and data centers occurred as well in the last few weeks. We believe this is still potentially over-interpreted to some degree. We still believe that the need for data centers is significant. Alternative energies are also going to be terribly important in the build-out of AI applications. So this, we believe, is potentially a hiccup in a much longer run. Take a look at the full report, and as always, happy to take your questions. Thank you.